Hi traders, welcome to another video of the weekly trading idea. Today we will update our dollar index study and the previous trade idea and the DUSD, along with the correlation with the US stock market. Thursday was the worst day for stocks since March. And today the Dow Jones opened with 450 pips gap as concerns about a second coronavirus wave remain. The majority of main currencies opened with bearish gap against the greenback. This week we have three central banks' monetary policy announcements, Australian employment, and the New Zealand GDP scheduled for release. Tuesday news on the core retail sales for the USD are very important to track the recovery. Looking at the daily chart on the Dow Jones, price corrected 61.8, the golden ratio from the previous rally. The trend remains bullish. This may not be a clear breakout because this is a gap breakout. So we will be watching the 61.8 area, which is a support zone at 24,700. A break for this area could lead to a big sell-off on the US stock markets, maybe to this support zone. Also, we can take the Fibonacci from the total up move. It's around 50%. Today's closing is definitely on my watch list because if price closed the gap and closed as rejection, it could continue the trend to fill the previous gap at this level, as you can see, from February. Studying the Dow Jones is very important before studying the Forex market because it's negatively correlated with the US dollar in such pandemic. Looking at the dollar index chart, as we said last week, and as expected, price corrected as force wave and could continue the downtrend. But now the force wave may not be done yet. We tested the 38.2. A break above the 38 could lead to the 50% and even 61.8, which is also a resistance level. If you go back, as you can see, going to the lower time frame, I will go to the 1 hour time frame. We have a consolidation here. This could trigger the end of fourth wave or the beginning of the fifth wave to the downside. For possible fifth wave, maybe to the downside using Fibonacci extension, or to the 61.8 or 50% as wave 4, retracing from wave 3. So as a recap for buyers, watch this level at 97.3 to go up, or a rejection here or the break for the 1 hour pattern as we mentioned to go as fifth wave to the downside, as you can see. Now let's go to the NZD chart. This confluence level didn't disappoint us. Price fell around 170 pips. It was a great trading idea. If you go to the 4 hour time frame, we hit the target of the double top. This is a double top reversal pattern projecting its target. We're done, and measuring Fibonacci retracement, we corrected exactly 38.2. So next we will be watching this pattern. It might be a rectangle to trigger the fall. A break for the 38 level, which is 0.6383, could trigger 50% and maybe then 61.8. And according to the Dow Jones and dollar index studies, to obtain this scenario, we need the fourth wave to continue on the dollar index to the upside, along with fall in the stock market. Alternatively, if dollar index went down immediately as fifth wave and Dow Jones rejected and rallied higher, we could see a double bottom and another test for the weekly trend. So we can test it again. So that is it for me this week. Thank you guys for listening, and I will see you next week.